Good evening and welcome to another edition of the 2020 Economic Recession and Preparation channel. I'm your host, Tony, and I thank you for joining me once again. So today we've come to the first full week of 2020, and the markets were down today. They pulled back a little over 100 points. This is after the sixth of seventh week that the markets have melted up in favor of the positive side as a result of the allegedly phase one China trade deal. The melt up has continued as a result of the repo market being injected by millions and billions of dollars by the Federal Reserve. So in spite of all of this, economists and speculators are still positive, optimistic ahead of Tuesday's earnings season report and released by banks. But my friends, as you know, with what goes up must come down. And as we look at the data ending in 2019, today we got numbers for the job reports. The job market ends 2019 with disappointing 145,000 jobs were added. Only 145,000 jobs were added. And as a matter of fact, the unemployment rate has ticked up now to 3.5%. The economists and experts surveyed had been looking for a job growth of 160,000 jobs. Okay? So, the job growth that we've experienced here has declined, and this is for the month of December ending 2019, according to CNBC.com and according to the economist survey. So the numbers are down. This is facts here. As you know, we preach facts here. We don't live in a fairy tale land. We're not going to tell you on our channel that everything is booming when it's not booming. We live in reality, not in a fantasy make-believe world as others have been telling you. But as you can see, okay, everybody in the United States has been expecting, and economist experts are expecting a job growth number of 160,000, but we only have 145,000 jobs, in payroll. So, on top of that, we also have unemployment ticking up. Okay, the number of unemployed surged to a 1.5 year high. This is once again according to Reuters.com at the end of 2019. Okay. Now, those filing for jobless benefits went down. The applications went down to 214,000 for the week ending January 4th, 2020. But the unemployment numbers have increased. All this means is that those people who either ran out of unemployment benefits or gave up looking for work, those are included in the data. And that would suggest that those numbers are ticking up. Okay. So, now, as you remember, we had the war with Iran, not the war with Iran, but these escalations with Iran, if we can call it that. Now that has ticked down, that's why the market has tipped up, along with all the news that has experienced. But the labor market, the job market, appears to be losing momentum, okay? Jobless claims are up, unemployment is up. On top of that, manufacturing is down. Okay, according to some manufacturers, manufacturing lost 12,000 jobs in December and increased by just 46,000 for the year, well below the 264,000 jobs that were created in 2018. This sector has been in contraction for several months amid the U.S.-China trade tariff battle and a slowing global economy. This is key because this slowing global economy is something that I want to talk to you about right now. Okay, so not only that we're not filling jobs, we're having a hard time filling jobs in the sectors such as healthcare, manufacturing, banking, transportation, but we're having a hard time producing anything in America. Okay, and so most of your stores like your Walmarts, your Targets, your Kohl's, they're getting stuff from overseas, China, Singapore, Indonesia, Thailand. They're not being manufactured in the United States. And this is what's going to hurt our economy even more and slow us down even more because if you remember, the global debt level is at an all-time high. All of your big G8, G20, OECD, that's the Organization of Economic Countries in Development, all those countries are in massive debt, but the United States leads the way with massive debt with $24 trillion of debt, which doubled from 2008 since Obama took over all the way to now where Trump took over. We doubled it from 11 trillion to more than 24 trillion dollars. Okay. And someone has to pay the piper for that. Okay, eventually the roosters are going to come home to roost, and this is what we're seeing now. Today on CNBC, as I was watching the economists and the experts, they were saying that over 50% of the companies you see listed on the Dow Jones, the Russell 2000, S&P 500, NASDAQ are not profitable. Let me repeat that again. Over 50% of all the companies listed on the NASDAQ, S&P 500, the Russell 2000, etc. are not profitable. That means they're not pulling a profit despite all of the investment income being into these startups, these unicorns, tech sectors, blue chips, small caps, whatever you want to call it. They're not profitable. This used to not be a problem, but now everything is in a bubble. It's become a major problem because once this economy slows down, which we can see now, which I've been telling you for several months, that we're just now over the hill into 2020, and we're going to see this thing slow down and pull back dramatically. As you know, the Dow Jones recently went over 29,000, but it pulled back a little bit today to about 28,700 or 800 or so. But this is just testing the market, okay? When the big pullback happens later on this year, either before the election or just after the election season or whenever we're going to do it, in 2021, we're going to see a massive depression, and not only of jobs, but a massive depression in all of the bubbles popping in the auto sector, the finance sector, the student loan sector, the credit sector, because credit is going to be seizing up later on this year. Company credit, corporate credit, personal credit, and that's going to be because they can no longer issue new debt because everybody, the United States is not going to have enough money to make its interest payments on its debt coming up in this later part of this year. Okay, and what's that called? That's called a liquidity problem, when you don't have enough cash to pay your bills. Now, it's something that regular Americans have been experiencing all along. You and I, the regular hardworking tax-paying Americans. By the way, think about this. This is just an aside, though, but think about this. Some of these companies on the S&P 500, and I'm not going to name any names, they don't even pay taxes, and they have loopholes, and they still are not profitable. Okay. So you can imagine the fudging of the economic numbers and the accounting and the fudging of the books that is going on right now, even as I talk with some of these companies as they get prepared to report earnings, first quarter earnings coming up this Tuesday. Okay, so watch out for that. You can imagine the fudging of the numbers and the optimism that's coming up by this propaganda that they're sending out that everything is okay when everything is falling off the cliff completely. But back to what I was saying, okay? Not only is the debt load and the job numbers horrible, but like I said, we also found out that these companies are not profitable and that they're cooking and stuffing the books with fake data, fake numbers, and all of that stuff, okay? So since the stock market is overvalued, and the stock market worldwide is overvalued, but the U.S. is the chief among the stock market overvalued, okay? They don't have the liquidity, they don't have the cash, okay? And this is what's going to lead to a progressive big overhaul of the economy, okay? And the super rich want this because they basically have cheated everyone else out of all of the money that's available in this economy and this money supply, and have made things so expensive and unbearable for the average consumer that there's not much money left to be made in a quote-unquote free and open market. I say that in parentheses because we all know right now that these things are heavily manipulated. The markets are heavily manipulated, and the stock market's heavily manipulated. But once this thing crashes, we're going to get back to more sound money based on gold, based on silver, and even cryptos. I'm not knocking out cryptos yet. I know people say that it's a scam when the power goes out. Well, that's not necessarily true, because we are moving to a digital society. Everything is online. Everything is traceable and tracked. And so because of that, whatever new system we go to is going to be definitely more digital and more conducive to tracing where all of these dollars are going through the loophole. There will be no more missing $20 trillion in black budgets and all of that things in the new economic system after the fall. This is after 2021. Once we suffer the fall, once we come out on the other side, which, like I said, that could be another. This is going to be this next depression recession. The 2008 was just a little warm up, a pep rally, okay, a cheerleader. You remember pep rallies back in high school? That's what it was. This next depression recession, I'm calling it depression basically, is going to be lasting from anywhere from 5 to 10 years. That's how long it's going to take to reset this whole economy, because the divide between the rich and the poor is so great right now. And this is not only in America, there's uproars in South America. There's violence in the Middle East. There's violence in China, Hong Kong, violence in Turkey, Greece, Albania, you name it, okay? Because all around the world, we're all facing the same problem, and no one has a major solution to this. Some have said socialism, some have said communism, some have said let the markets laissez-faire. Others have said we'll just give everybody a universal basic income. That all sounds good on paper, but who is going to pay for this? Especially when the people, the super rich 0.001% who's running this country and running things are already stealing money and have their money secured in underground bunkers and who knows where else all over the world, okay? They're not going to pay for it, and so therefore we know that there will always be the creme de la creme who's going to steal and take from the poor and disadvantaged and other people, okay? So that's a pipe dream. So we're living in this bubble. This is the 12th year of expansion, U.S. quote-unquote strong expansion with all these fake dollars floating around, okay? So statistically, and history tells us that something is going to come and break it, and that's going to be the depression of 2021. Once the stock market crests over 30,000, which we believe will happen this year, sometime this year, and after that, that's it. There's no more games. There's no more money printing. There's no more saving the repo market or saving the banks and all of these things. If you don't have the capital, you don't have the cash and hard tangible assets, cash, land, food, water, gold, silver, crypto. You don't have any of that. That's it. We're just going to go ahead and crash it. And it's really up to the Fed. It's not only up to the Fed. It's really up to the world banks, because they're the ones who decide the policy. And it's really up to the rich people, the super, super rich people who are going to decide what's going to happen. But we all know that the crash is coming. It's coming soon. And like I said, 2021 first quarter, we're going to be, the media and everybody's finally going to admit that we are in a recession, darn near a depression probably by that time, because that's when credit will be seizing up dramatically. Credit's going to seize up dramatically fourth quarter 2020 anyway. But I'm telling you right now that you need to get prepared as best you can, because credit is going to be very tight, because we're almost on that debt bubble right now, okay? We're approaching that debt storm, the debt bubble. It's coming. And it's coming in fast, because you can see it right now. They already told you, even experts who want to remain optimistic are saying right now on various MSNBC and various channels are saying right now that earnings seasons could be very disappointing beginning this 2020 year, because the money is just not there. The manufacturing is just not there. Online sales only account for 5 to 10% of sales, so we can't blame Amazon for everything. It's just a sign of people just don't have the actual disposable income, okay, after they pay their bills and everything else, obligations. Even if you do own an apartment complex or real estate, you still have bills. You still have maintenance bills, operating costs, a payroll, okay? So there's just not enough money to circulate around. And even with this part-time gig economy, you see a lot of people in your communities driving for Uber or Lyft or delivering DoorDash, pizzas, and Grubhub and all that. It's not enough to sustain a worker, to feed a family, or even sustain yourself. It's just pocket change. It's just money on the side. Okay, it's a hobby. It's not a business or entrepreneurship as like it's on Shark Tank. But stay encouraged, my friends. I will continue to update you as the closer we get to that Tuesday earnings season report. But I can tell you right now that it's going to be disappointing, just like the jobs number I just explained to you. Earnings season first quarter is going to be disappointing. As a matter of fact, some companies. Let me just name 3 companies that are in trouble right now. Kohl's is in trouble. FedEx is in trouble, okay? And another company that's teetering on the brink of trouble is Macy's. So look out for those 3 in the retail and the blue chip stock. And I don't think WeWork and technology is going to save us in the technology sector. I don't think they're strong enough to pull us out of this next recession or depression, because we're not creating jobs, we're not manufacturing anything but debt and consumer worry and fear. So be encouraged, my friends. Continue to prep. as best you can. Continue to save your money. Continue to spend only that what is needed. Start taking your lunch to work or school and save money that way. Cut back on unnecessary expenses. Stay healthy and stay blessed. And I'll talk to you soon after the weekend. Have a great weekend, and I'll see you soon. Bye-bye.